Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. Every year for over a decade, he writes an absolutely extensive annual year in review and a preview of the year to come. He is a professor of organic chemistry at Cornell, libertarian, and fan of the Austrian School of Economics. Dave Collum, thank you for joining me again.
Hey, it's a pleasure. Glad to get together once a year to have these chats. Works for me.
Yeah, I always enjoy these chats because we don't just talk about markets. We kind of talk about all the crazy social environments that are going on with the culture and current events. And now we're coming up less than a year now in the 2020 election, which is just going to be absolutely silly based on what we've seen with the current events and Trump already being impeached.
This year has been, for me, more about social change than economic change. The economic change feels like it's waiting. Social change is at full throttle.
And before we talk about the social change, and there's a lot of interesting things to talk about, let's just talk about November 2018 and December 2018, because we didn't get a chance to talk about that last year when I interviewed you about last year's report for 2018 review, 2019 preview. You finished most of the report, I think, before that happened. Now we have more of a chance to look back on the events. So for listeners who are not familiar, let me just give a brief timeline, and then David could comment on it. I'll just give a brief summary. So in November, we had the General Electric news. Their credit was downgraded. People were finally starting to look at their balance sheet problems and how much debt that they had loaded on. And that started to freeze up credit markets and the junk bond market. I think there was a 40-day approximate freeze of new credit issuances. People started to panic. And then that led us into December, where Jerome Powell did the last rate hike, which a lot of people said he didn't need to do, but he did it anyway. And then in December, on Christmas Eve, Steve Mnuchin, our Treasury Secretary, was on vacation. And one of the weirdest things, Dave, I've ever heard or seen in my life happen, where this weird press release was issued announcing a secret emergency meeting, naming the Federal Reserve, the FDIC, the Treasury Department, and, of course, the Plunge Protection Team. And after the stock market had a big correction, right borderline on a crash in a bear market, I think we're a little bit below 20% down on the major stock market indexes, and things were looking pretty bad. Things started to reverse fairly quickly in spite of the quantitative tightening program that the Fed was doing. We also had, let me add the one last thing on the timeline I forgot, was Jerome Powell, who had criticized the QE programs in the past, one of the only people on the Fed Board of Governors. He was on stage with, Ben Bernanke and Janet Yellen, and he did a 180 and started, let's say, saying nice things about Ben Bernanke and Janet Yellen and what they had to do to, quote-unquote, save us.
Yeah, he actually pried his credibility right there in the spot in about 2 seconds. So, yeah, your synopsis, I agree with some of it. For me, at least, maybe not for everyone, but for me, at least, was sort of an in retrospect analysis. What I knew was I knew a little bit about the spikes in the repo market, not a clue what was happening there. The equity markets were down, sort of 15 to 20%. They didn't ever reach the 20% mark. I would disagree with the idea that it was looking pretty bad. You're a candy ass if you can't take a 20% correction. And the 20% undoes nothing. So by comparison, over the last decade, the GDP grew 50% and the markets took off to the tune of 300%, and they historically track. So that's an eightfold excess of markets over reality as far as I'm concerned. So when they were sort of going down, which was long overdue, and it was just starting, as I said in my write-up this year. I said, we hadn't even started popping rivets yet, right? This was nothing. There wasn't even forced selling or anything. And then Mnuchin did his masterful declaration of the Plunge Protection Team, and it was just staggering to me. I'm going, we can't take a 20% correction without you guys panicking. What the hell's that all about? So, sort of in retrospect, at least again for me, was the increasing awareness of how much the credit markets had seized up. Now, I would stand by everything I said, though. I think, at some point, if the Fed's going to hit the brakes, then there are going to be people smashing their faces against the windshield. It is not avoidable. I think they have to be as determined as the guys who dumped, young men on Omaha Beach in World War II, right? You can't be a candy ass in this game, and they just chickened right out. So they showed a cowardice that shocked me. And so then I think it was January 4th or something, Powell found himself on stage with Yellen and Bernanke, which to me is just incredibly stupid to find yourself there. Unless you had a premeditated purpose of getting there and then making some announcement, which is the only rational thing. Because Fed chairman can't speak extemporaneously like that without expecting things to happen. So in any event, so he said they're watching markets very carefully, and that basically was a green light. And there was a massive short squeeze, and they were run out of the markets, and there's some evidence that maybe they'd even lined up some big buyers to start the ball rolling. I think it was the Sovereign Wealth Fund of Norway was a huge buyer at exactly the right time. And there were some others that I can't remember now who appeared to have been more than just lucky timers. And so maybe they said, look, here's what we're going to do. We need big money to enter this market, tomorrow morning when we make this announcement. So I think they do that. I think that's really standard protocol, actually. I think they did that in 2007 to 2009 when they rallied the market, and they got guys like Buffett and stuff to throw big money at it. So in any case, they showed a level of cowardice that shocked everybody, and I rounded up probably 25 quotes of very, very powerful people saying that the Fed is just pathetic and that this is a charade, this is crap. So they had very little support from the big players as far as I can tell. A lot of the real serious guys like Gundlach and Bass and those guys, I really think they viewed the Fed as cowards. And if they're gonna blow up a bubble, then they've got to have the cojones to then watch it break, right? If they don't, then that's a one-way trip, and I just think they're idiots. So I really think they're pathetic. I'm so distraught by how bad Powell has turned out to be. He at one point he was sort of better looking than Yellen, but she didn't screw up like this. So
I agree with you. It shows that they're not willing to allow a 20% correction shows how fragile everything is, or at least the planners, the economic central planners, and the people in treasury departments and governments perceive everything as fragile, so they don't want to allow the asset prices to fall even close to 20%, because then that's bear market territory and forced selling, like you said, because then the moving averages and the high-frequency trading programs go into automatic sell mode, right, if it stays below 20% for a while.
Well, the other problem, though, is that we're, by historical measures, last year, I didn't redo it this year because I just can't stomach the idea of redoing it, but last year I presented 20 independent metrics that show the market is ballpark 2x overvalued, meaning a 50% correction would get us to the historical norm. And there's a lot of people out there coughing up blood on statements like that, and they say, oh, that's just crap, No, that's not crap. Go read it if you want. But the markets are profoundly overvalued, and part of it's because the profit margins are profoundly high relative to any historical one, and they're mean regressing numbers, right? You don't maintain high profit margins; they get arbitraged away eventually, and so everything is lined up. And we're getting misreports on price earnings ratios to the extent that anyone's stupid enough to use them. The Russell 2000 or the triple Qs have price earnings ratios that are listed as 22, 25, and people say, well, for fast growing stocks that seems fair. They're like 85, 90. They're literally lying about the price earnings ratios. They're fabricating. And a group called Horizon Kinetics did a full analysis on that and showed how they do it. They're actually kind of even open about it. They don't try to hide it. They just know that if they report low price earnings ratios, everyone will keep buying, and that's what they want. So the whole markets are totally out of whack, and then the Fed chickens out. I mean, they just chicken out. I think they're terrified of a recession. So when did this happen, right? Feds historically have caused recessions, knowingly caused recessions. And they did it when they felt, forget about whether a committee should be making this call, but they did it when they felt it was needed. And now they seem to have a complete allergic reaction to it. They lie about inflation numbers in a profound way, in my opinion. I think they came across my screen the other day, I think called the Chapwood Index, which is kind of a shadow stats equivalent where they look at 500 prices and biggest 50 cities. And that's putting inflation in the last 5 years at around 10%. And that seems too high to me, but it's not, the Fed garbage 1.6 or 1.7. Certainly not the cost of living is not sitting at 1.6, 1.7. And so I think they're terrified of a recession because I think they know that the next one could be just so much more than just, lost jobs and, slow GDP or shrinking GDP. I think they think the next one could be mayhem. The next one could be social unrest, stuff like that. So I think that if they're legitimate, right, if they're not just cowards, but they're looking at fear, legitimate fear and legitimate risk, then I think it's the risk that there's a complete social chaos in the next recession. Because let's say we shoot back up to 10% unemployment, which by the way those numbers are cooked beyond recognition too. But if we shot to 10% unemployment off of what the fake numbers at 3.7, and people are saying I've lost my job again, and now they're going to be bailing out the bankers again. You know how mad everyone's going to be. Everyone already thinks the Fed is a bunch of bad guys, the banks are a bunch of bad guys. And so this next recession, I think, is going to have such social content to it. That's what they're afraid of, if it's legitimate fear, not just stupidity.
I think a lot of people at the Fed are also delusional. They drink their own Kool-Aid. They believe that Keynesian economics is by far, their version of neo-Keynesian economics is superior to all of other versions of economics, even though if you look at their track record of predictions and their broken modeling, has no accountability. People aren't fired for making gross errors. The funny anecdotal story with this that I heard from my friend David McElvaney, who attended a recent conference for James Grant's Interest Rate Observer. There's actually a New York Federal Reserve member there. I think it was John Williams, either vice president or head of the New York Fed there. And what the guy said, he was listening to these presentations and people were criticizing the Fed and saying that they inflated the stock market and all the share buybacks. And then he interrupted a presentation at Grant's, and he said, look, everyone has benefited from a higher stock market. And I was thinking, well, most Americans don't even own that many stocks. It's distorted the wealth gap even more because, yes, some Americans have stocks in their retirement account, but the majority of stocks are held by the top 10% here in the U.S. And that's who has benefited from Fed policy.
The ultra stupidity in that statement is that, over time, the market returns a pretty steady return. And despite all the bumps and grinds and twists and turns, that over a 100-year period, this thing just steadily marches forward. It at least has so far, which is a period that includes the Industrial Revolution and plenty of energy and stuff like that. So it seems very unlikely it's going to soar upwards, not downwards. And so if overvaluation, here's something I created. People recognize it from a savings maxim, but overvaluation is appreciation pulled forward. And if you pull the appreciation, you're not going to get it in the future. So when the Russell has a PE of 90, you're guaranteed to have years of stagnation somewhere in the future because you got to burn that off, right? You can buy a Toyota or a great car, but if you buy a Toyota for $100,000, you're going to lose.
Or, David, the stock market appreciation at some point starts to underperform the real inflation rate, like what you have in Venezuela and Zimbabwe, where the stock market in nominal gains is going up enormously high, but it's still underperforming the inflation rate.
Right. And so the system breaks when you start doing stuff like this. I got an argument tonight, actually, on Twitter, where some guy was saying, it doesn't matter. He says you're so confused. He says the amount we save doesn't matter. The only thing that matters is how much we spend. And first of all, I'm trying to figure out how not to call him an idiot. But so I said, okay, so these people who've saved nothing and are spending, who's going to pay their medical bills in old age? Who's going to feed them in their old age? Who's going to house them in their old age? They've saved nothing.
This is why Keynesian economics doesn't work.
Well, I mean, I can invent a variant of Keynesian economics that would be, I think, recognizable to Keynes, but not to the modern clowns, the postmodernist Keynesians, that makes some sense. And here, it's in a nutshell, here it is. In some sense, it's almost an MMT theory too. If government, which has to build things, they build roads, they do stuff like this. If government did it when goods and services were cheap, and acted like a financially interested and rational party, then it would be naturally countercyclical. Like the government's monies would be spent well, right? And then when the goods and services are expensive, they sort of back away and stop doing stuff like that. But
and how many governments have run?
Time is too much. They can't.
How many governments have run surpluses? How many governments have run surpluses like Keynes? Yeah, I can't name one. That's one large government that has run a surplus to spend out of a recession.
No, that's a fantasy. I was just saying that if governments acted like a financially interested party and were rational, those two, the minute they start talking about stimulus, they're off the rails. So governments will never do that, and that's why the MMT crowd is completely out of their gourds too. But we're going to get a bunch of that crap too going forward. And so I'm pretty dark about where it goes from here. And people can fist pump all they want in the air, but everything looks metastably high to me. And I can't tell you when it's going to tank, and I can't tell you the path it's going to follow to the bottom. But I'm confident there's a bottom out there in our future that's going to be painfully bad. I just don't know how it's going to play out. But I don't need to. That's enough for me to step aside and try to take cover.
There's already evidence, David, that MMT light has started in the last 12 weeks. Daniel Amerman and Chris Martenson have written articles on it in the last month or so. Chris Martenson with the article in mid-November, and then Daniel Amerman with the article last week, talking about how the Fed is now, on a weekly basis, monetizing about 90% of the Treasury debt starting in the last 12 weeks. So that's MMT light. That's MMT light. That's what's been prescribed by MMT people, essentially.
Yeah, the difference, though, is the MMT guys want this whole operation being run by Congress. And that's where the MMT guys take lunacy to another level.
They also, to add to your point there, Dave, they also want the money allocated instead of maintaining the status quo. They want the money spent on free education, free health care, Green New Deal, universal basic income. I can't think of any of the other social programs off the top of my head, but I'm sure there's more.
Well, they also think that they're in charge of deciding which industries to emphasize, which is very Soviet-era garbage, right? And they think that their job, as you said, is to mitigate climate change, which I think is a waste of money. And so the MMT crowd is they wrote a manifesto that to me was the most devastating condemnation of their own plan. Couldn't have beat them with a 2x4 better than they did by writing their own manifesto.
Do you think this is why Elizabeth Warren is starting to lose popularity in the polls, because she's starting to anger Wall Street and she's making all these, not just a couple trillion promises, but potentially promises for many trillions in new spending?
Well, I'm not sure that would hurt you in the polls. The rumor that I heard on Warren was that, and it makes sense to me, I hadn't thought of this, but it makes sense to me, is that when she started talking about free health care for everybody, then all of a sudden a bunch of people have health plans that they don't want to risk, and they vividly remember, Obama saying you can keep your health plan if you want, and then them getting screwed. So all of a sudden, people say, wait, free for everyone means free for me, means I get the crap that they're going to serve up, and I want to keep my original health care plan. So I've heard that it was the idea that health care would be sort of foisted upon everyone, that all of a sudden people said, no, I don't want your free plan. If you want to give free health care to some minor subset of the population, to get votes, have a ball, but they don't want it. That's what I heard. Is that true? No way to know. There's a kind of a logic to it.
Do you think the health insurance companies and the Wall Street banks are some of the ones that are against her now?
I have no idea. Interestingly, I've been trying to figure out why healthcare rates are going up so high. I've written about it now. Boy, I've pissed off some people too. If you look at, people say, the ungodly profits made by the pharma. If you actually look at the profits made by pharma over the last 20 years, it's just not that high. You can take all the big cap farmers and look at them, and some of them are doing fine, but they're not printing money. They're making money, but they're not printing it. It's not irrational. They've been solid investments at best. The CEOs are not profoundly overpaid. bottom line is, this is my world. It's very, very expensive to take drugs to the market. So it's not the pharma. They might be cranking the price up by keeping generics out of the game. That could be one thing. But again, it's not making them a ton of money. And so then the question is, who's making the money? And the answer, it turns out to be, the ones I've found, turns out to be the insurance companies. They're the ones making the money. Look at insurance company stocks. They have soared over the last 5 years. They look like defense stocks. They are spectacular. Then I realized these guys have figured out how to take increased healthcare costs and make even more money off that, which is counterintuitive, right?
Well, costs are soaring for healthcare. I don't know, like you said, the profits are not corresponding to the cost soaring. So that to me would mean that there's a lot of waste, fraud, corruption, and abuse.
Right, and so it turns out that the healthcare company, the insurance companies have figured out how to take the inefficiency of that and add even more profit on top of the soaring cost. Which this is, if you had told me healthcare costs were going to soar, I would have thought, well, then let's short the insurance companies. That would have been a completely fatal move.
Welcome to dystopia. Yeah, it's craziness. Do you think the Fed won't allow a stock market crash anymore without more intervention?
I think they're too stupid and too incompetent to be able to do that. Anyone who thinks the Fed is omnipotent has to do a sanity check. They are omnipotent enough to screw the system up enough to make this thing go on longer. But they're just going to do super damage, just super, super damage. And they are doing it. It's not that they're going to. They are. And they've totally mitigated all chance of price discovery. There's no longer a marketplace where lenders and borrowers meet to haggle over the price. The price of capital is being so profoundly mispriced. So I did a podcast with Max and Stacy a couple weeks ago, and Max kept pushing it towards, the billionaires, making all this money. I said, Max, that the billionaires are making this money just because the Fed's offering them free money. These guys see a seam and they go for it, right? These guys spot an opportunity. These are like Labradors chasing sticks, right? So you can't blame the Labrador for chasing the stick. You got to quit throwing the stick. And that, to me, that the adults in the room are supposed to be the Fed. And the fact that they've got interest rates below the inflation rate, and the fact that they talk about the inflation rate being too low, these are morons, right? These are morons. I am so fed up with these guys. They're second-tier bureaucrats. There's none of them on that. There are a bunch of idiots on that board. None of them know what they're doing. They're either theoretical or incompetent. Where's Paul Volcker? Where are the guys with some cojones when you need them? I'm so mad at them at this point. They just leave the system alone and let it correct and let it adjust and let us have recessions when it's time for a recession and not blow up monster bubbles and then not try to protect them or not even feel the need to pop them. Just goddamn, keep a lower footprint.
They have too much power and not enough There's basically no accountability because there's no election to hold them.
No humility. They think they're so smart. They're not.
Well, that's what I know. A lot of PhDs that think that way in different disciplines.
Yeah, that would be me, maybe, right?
No, I think you're fairly humble. I've known you for a long time, and I think you're fairly humble.
Not based on the last 20 minutes of ranting. I'm not. I've decided I know more than the Fed. There's not a lot of humility in that. I'm confident, though.
You don't have the track record, though, with hundreds of billions in mistakes the Fed does, though.
Yeah, I haven't screwed it up yet. So my track record's perfect, right? I haven't broken anything yet. So, I've got a perfect record.
Well, although some of your Twitter trolls are trolling you for not just buying the dip in every stock market index and forgetting about it.
Yeah, they're going to be smudge marks. They're going to be smudge marks. You could probably plot Twitter trolling versus market valuation, and it probably is a coincident indicator of market valuation. Again, when you start seeing people talking about how smart they are because they rode this rip, and I'm looking at them going, dude, you've squeezed the last drop of juice out of that lemon and you're proud as hell. If you jump out now, you have my highest respect. but so here's the question I like to ask. Once you're sort of out of juice, right? Once the market's just exhausted, right? It's just spent every last little bit of appreciation it can get. Unless it's holding steady. So you're a leveraged speculator, but you're no longer rocking. Are you going to be willing to sit there with this leverage in place that's returning nothing, but posing huge risks? Or are you going to say, I think it's time to head out the door? So by definition, once it starts to stall, like some, airplane or something, once you hit stall speed or whatever it's called, then it stalls. And then everyone rushes to the exits all at once because none of them want to be that last man standing, right?
What's your opinion on all these central bankers, whether it's Christine Lagarde at the ECB, Neil Kashkari, and others, talking about social engineering using their positions in central banks to allocate capital and policy if the politicians who are voted in won't do it?
Well, I hate it. Who made them king of the universe? Right? I hate it. And Kashkari's a lightweight. I mean, he really is a lightweight. Lagarde maybe has chops. I don't know. She's not a banker, though. She's a politician. I think they put her in place because they knew that at some point they were going to need someone who could broker deals across Europe. It's not about banking. The person in charge won't have to know how to do banking. They'll have to know how to negotiate out of World War III. I think that's why Lagarde got put in there.
Oh, I heard that. Yeah, I've heard that from other sources. I've heard that she was selected for her skills as a negotiator and a lawyer to try to maintain the European Union. Yeah.
Right. I think that's right. And so they don't need a banker. They need a peacemaker. So she might be the right person.
The numbers that these central bankers are talking about for their social engineering programs, the numbers that Bernie Sanders, Elizabeth Warren, so many others are talking about, it's nuts. It's not even like a couple $100 billion extra in the budget for each year. We're talking many trillions of dollars more, and they're acting like it's no big deal.
50 to 100, right. Real stupid numbers.
And the argument from a lot of MMT proponents is, well, the Fed has taken their balance sheet from, $800 billion before the 2008 financial crisis up to just under 4.5 trillion at one point, or right around 4.5 trillion was the high. And now we're headed back there now that quantitative tightening is almost totally negated for 2019. They're making it like there was no inflation. Yeah, I just remembered my point. Sorry, a little brain fart there. Making it like there was no inflation along the way. When the
they're buying the model that there's no inflation. I could easily imagine us hurtling into deflation. So to the extent that the plane's at 20,000 feet, and they're trying to take it to 30,000 because they're afraid of zero, right? It's not going to work. At some point, you got to bring the plane down. So the MMT crowd thinks inflation's under control. So they think, well, we can just keep spending. Inflation can appear so unbelievably fast. And here's the thing the MMT crowd doesn't know. They don't have a clue how to fight inflation. They are clueless idiots when it comes to fighting inflation. That's my opinion. Everything I've read about MMT, they have all these master plans about how committees and government are going to set this price and set that price. It's just soap-eater garbage. And so they pretend, they always, it's very nuanced, it's subtle, that's how, but we know how to control inflation. No, they don't. They don't have a clue. The MMT guys are the craziest bastards on the planet. And here's the problem. Their story's going to sell. So in the next election or the next crisis, it's going to be a bunch of rallying cries. It's going to be the bankers got theirs, now we're going to get ours. It's going to be free shit for everybody, right? That's what we're going to hear. Those are going to be, it's our turn now, rallying cries. And it's going to sound so good to the average Joe who's feeling so abused. But that's just Venezuela 2.0, right? We're just heading down the wrong path. And the MMT guys don't know how to control inflation at all. They don't have a clue. Here's a quote for you. The queen bee of MMT is Stephanie Kelton. And at one point, someone was talking about spending the money. And she says, well, the people won't have to pay for it. The government will. And I'm thinking, you're retarded, right? I mean, you got hit in the head with a baseball bat or something in Little League? How could you think that? You're a moron. Hey, what would make a PhD economist say it doesn't cost us anything, it only costs the government? That's insanity. that person should have their degree taken away.
It's very frustrating hearing this. You know, David, it's almost like there's two separate realities. Because if you were to watch the news, let's say you watch Fox News for a couple hours and then you go and you watch CNN or MSNBC or mainstream news, it's almost like there's two separate realities. They don't cover anything even close at all in most cases. It's that we've gotten that polarizing with just the quote-unquote news. That's how crazy things are now.
Right. Well, I don't want people from Fox lying to me. I don't want people from CNN lying to me. And, you know, I'm if I have to listen to radio, I move around trying to find someone who's willing to rip on someone who I don't happen to like, and that's about it. That's your only hope. But I listen to CNN, and they're just awful. And I watch the impeachments, and they're awful. And I watch the media. The media has so utterly failed us. So the Constitution gave the media certain unalienable rights because they recognize the importance of a vibrant media. Our media sucks. Our media has given it up. They're a bunch of prostitutes. They're a bunch of whores. They're on payroll. I don't care whose payroll you're on. I don't want you on payroll. Where's Woodward and Bernstein? They do not exist. There's a couple of people out there I really like, but then there's this collective mass of pieces of garbage who just steal those knowingly. And they're just, you know, pick up your check on the bedstand and go. You're paid to leave.
The incentive structure in the media is the exact opposite of what it should be. So instead of doing real investigative journalism and asking tough questions to a lot of different people and pursuing the truth, all the incentive structure is the exact opposite. Look what Pedro da Costa, right? He was covering the Federal Reserve for a long time for the Wall Street Journal. And he's buddy-buddy with a lot of those guys. And he asked Ben Bernanke one tough question, and he gets fired from his job for a long time. So all that seniority, all that tenure, all those contacts he had, and he asked Ben Bernanke one.
He technically quit. So the day he got told by the Wall Street Journal that he was not allowed at the Federal Reserve meeting, the press conference, I was active as hell on Twitter, screaming my head off. And late that night, he and I swapped a few emails, and I could tell from the email that night he was going to quit. He was just so mad. And then he went to, I think, the Peterson Institute after that. But he was smoking mad.
Do you think he was told basically that it would he should quit because then if he gets fired, it'll be tougher for him to find his next job?
No, I think he just was so mad at them he quit. I don't think he was threatened to leave. They just said you're not going to the Federal Reserve press conference because in the previous one he had asked. I actually thought it was Yellen. I think it was not Bernanke. I think it was Yellen. And he asked her questions. They were leaking information to traders about what the Fed was going to do. And Pedro asked him about this clearly illegal activity, and Yellen did some backpedaling like an NFL quarterback. But then the next press conference, he got his boss. I don't know if it was the editor-in-chief of Wall Street Journal or not, but his boss basically walked into his office and said, "You're not going to the meeting today." So the Fed apparently said, "You guys are not sending Da Costa." So he quit, and I power to him.
I see. So it was soft power then. It was suggesting that, you're not going to be able to do your job anymore because they don't want you even asking that. You asked the wrong question, I feel.
Well, the easy route for him would have been to just not go and then go back to asking generic, Fed questions. But he just, he took the high road and got irritated and quit. And he just said, okay, that's it. I'm done. I don't like this anymore. And so hats off. And then again, it was a tough day for him though. It was stressful. So actually, what got us swapping emails late at night was, I think by the end of the day, he was stretched pretty thin emotionally because of that event. And but he told me he was moving to the Peterson before he announced it. But I think he packed his bags that night or something. He was just so mad.
So I want to talk about the inverted yield curve. It was a big story in 2019. In February, Lael Brainerd, who's trying to get promotions after Trump's gone, she wants to be either Treasury Secretary or head of the Fed. So she's been trying to become one of the main experts that people go to for Fed analysis and interviews. And she said in February that the Fed doesn't care if they invert the yield curve. And it seems that the Fed has backtracked on that because we got the 3 rate cuts over the summer that the Fed did. And I would argue that those 3 quick rate cuts that other people said that the Fed didn't need to do were done intentionally by the Fed to try to uninvert the yield curve. So is the Fed just going to keep changing the rules here as they go? They've been doing it
that way for 110 years now, right? 115 years now. So 105 years. They keep changing the rules. They've gotten less humble in their old age, but yeah. So some of the big guns who criticize them said, look, you have just changed direction multiple times in a couple of months. You know, how is anyone going to take you seriously, right? And they said it in very stark terms. And so again, it comes back to the cowardice. It comes back to so they chicken out, and then they start lying, right? At least tell us the truth. We're not as stupid as you think. So they start calling the rate cuts an insurance policy. And that became the meme, right? You can always tell when it's a talking point because it starts coming out of a lot of lips all at the same time using the same language, right? And so they start talking about an insurance policy. Next thing you know, some other central banker in some faraway land is talking about an insurance policy. I'm going, let me see if I got this right. You're sitting at, 2.5%, 250 basis points. And in previous rate cutting cycles to save people's bacon, they cut more than 500 basis points in the last 2. They're sitting at 250. And these guys are shooting warning shots in the air. Meanwhile, the unemployment rate, admittedly a big fat lie, is sitting at 3.7%, and inflation is climbing, yet they start cutting rates. They had no defense for cutting rates, except for the fact that the super hyper over leveraged shadow banking system was jonesing for credit. How about sending those guys out on the street? How about letting those guys goddamn collapse? I'm for it. I'm with it. I want it. You can't let leverage speculators run the Fed this way. That's what gotten us in this mess. We've got a bunch of crackheads telling the Fed what to do.
And these leverage speculators. Huh?
I'm super mad. I'm super mad at the Fed. I don't think they're sincere.
At this point, Dave, they're getting away now every 2 or 3 weeks with a new press release with even larger repo madness with these term repos that keep getting extended longer and longer periods, more total money and duration, more amounts of term repos offered to the bank. And the banks
then they claim that it's not QE while their balance sheet is exploding. They're lying.
Yep.
They're just lying. And, God, don't lie to me. Stop that, right? If you want to tell me something, just tell me. Stop lying. Japo, you are a liar. And you can see the balance sheet. And then I had my wife create this picture. The old timers will remember Reefer Madness, right? That's where the Repo Madness thing came from. But I'm shocked to discover no one's thought of this. So I had my wife draw a picture. She's a pretty good artist of Japo sitting at the piano, at the crazed pianist in Repo Madness. Reefer Madness, sitting there because he's stoned out of his ass. It's some 1950s cult flick, 40s cult flick, and then the other one I created out of grass using Photoshop, whatever, and I took the I can't believe it's not butter picture from the web, and I had him put in I can't believe it's not QE. He did a beautiful job. It looks authentic. And I was shocked that no one had thought of doing that. They're I can't believe it's not QE. So they're just like, no, this is not QE. Yes, it is QE, you lying dogs. It's QE. I don't care what you want to call it. By the way, where they're going to get hammered, here's where they're going to get hammered. So the guys who say they never should have hiked rates, those are guys who need rates at 0, right? If you're sitting at 0 and you can't hike rates, it's game over, period. Game over. We're out of gas. We've done it. We've screwed ourselves so badly that if 0 is too loose, we got a big problem. And so then they start hiking it. Where they're going to get hammered by history, I think, is that they started quantitative tightening and hiking rates simultaneously. That's going to be the thing that the historians point to and say that was the mistake. And and they made it like, oh, the quantitative tightening is going to be in the background. Yellen said it'll be so quiet, so uneventful, no one will notice it, right? Well, Lacy Hunt, who's one of the smartest guys on the planet, I struggle very hard to understand what the hell he's talking about, said that the quantitative tightening was an implicit, right? This is danger, Dave. I don't understand what implicit means. I do in English, but not in this case. An implicit 250, 300 basis point hike due to quantitative tightening superimposed upon 250 basis points. So in a fairly short period, they cranked up interest rates operationally, or say implicitly, 500 basis points. That's fast. So if Lacy Hunt's math on what an implicit, what implicit rate hike and quantitative tightening represented, then they hiked too fast. But it's not that they shouldn't have hiked; they just should have been more methodical. But then they chickened out, bunch of cowards.
Well, I mean, the system is so over-leveraged that even a couple rate hikes started to cause problems. So what they did was 7 or 8.
Tip it over. Blow the joint up then. I'm here. I'm
ready.
Well,
I would like to. I'm in favor of free markets and real capitalism, but they're not allowing firms to fail. So you can't have capitalism without bankruptcy.
It's their creation. It's Dr. Frankenstein's monster, right? It's the arsonist firefighter. There's metaphors coming and going. These guys created the mess. By the way, everyone knows whoever creates a big problem, they are never the ones to solve it. They are never the ones to solve it. So whoever created it, don't expect them to come up with this. They're going to try to come up with the cover-up. And that's what they're trying to do. So they're pretending like they know what they're doing. They don't. And they keep doing the same. What was the rallying cry after the 08-09 crisis? Remember, how did they explain how we had that crisis? Remember the catchphrase? It was they kept rates too low for too long, right? How stupid do you have to be to keep rates lower and longer after that? How stupid, right? What kind of pin-headed weasel would come up with that plan after having a massive crisis for keeping them too low for too long? This is what makes me so mad. We didn't elect these guys. And these guys think that a committee of 12 luminaries should set the price of capital. They're stupid. I've said stupid at least 200 times so far.
Oh, we're in agreement. I mean, these people are book smart. I just don't think they have common sense, and they're obviously not being held accountable, because if they were elected, they would have already lost their jobs. If there was any accountability, they would have gotten fired. Instead, a lot of these people at the Federal Reserve, they're promoted on a Peter principle, on seniority. So the longer they stay at the Fed, despite their track record, the more salaries they get and the other perks and benefits.
Well, they don't get paid much except for when they get out, and then they get a multi-million-dollar job because they lick Wall Street salty balls. So they eventually get paid, and many of them are angling for that. But you can go a whole career in that bureaucratic job, and so one could argue that they are at some level sacrificing pay for power.
So let's talk about impeachment. The stock market actually went up, I think, on that news, despite of it. The dollar, in spite of impeachment, in spite of all the craziness with the Fed's balance sheet and Repo Madness, the dollar still is fairly strong. It dipped temporarily below 97 on the dollar index. So as someone who's paid attention to markets for a long time, what do you think of all this craziness going on right now? With Trump is arguing for negative interest rate policy, Trump wants a weaker dollar, and the dollar is not responding.
Well, first and foremost, if the Fed is earning their salary, they won't listen to Trump no matter what, right? And I'm not an anti-Trumper, but it's just not their job to listen to the president. And if JPO's worried about getting reappointed because the president's not happy with his performance, we're back to calling him a coward, right? So he just has to do what's the right thing. They're one of the few people. So here's the irony is that I talk about how powerless and neutered they are, but they are one of the few people who are in a position where they could be positively influential. And they're just choosing a path, which I think is just so pathetic. So they should be ignoring Trump. The impeachment, in some sense, is noise because it's going to, they had the numbers in the House. They'll never get the numbers in the Senate. So you could have written the script, 6 months ago. And so I think Pelosi's actually trying to find a way to get out of a Senate vote. So at one point I said something derogatory. I drew a lot of flack, and I realized that maybe I shouldn't have. I think Adam Schiff is despicable. I think he's like the enforcer for the Democrats or something. He picks the fights, and everyone has. If you hate Trump, then what he did was heinous. And if you don't hate Trump, you look and you go, he did some deal with the Ukrainer, which we don't know anything about. We really don't know. For me, was the smoking gun of the impeachment hearings was Sondland's testimony. So Sondland told me the whole story in one fell swoop. I was listening to it on the radio driving somewhere, a long trip. And I'm listening to him in the morning and what he said. I said, oh, shit, he just pounded Trump. He just nailed him, right? He just called everybody at Trump's campaign and everything, just a bunch of crooked guys. They all knew what was happening. And then by the time I get to that night, I'm picking up excerpts of the cross-examination in the afternoon, and he's saying, I don't know anything. I didn't see anything. I just presumed it. Don't look at me. I'm just a pawn. And I'm going, okay, Sondland in the morning or Sondland in the afternoon was lying. It was two totally different people in those two 4-hour slots. The morning guy said Trump was guilty of everything, and the afternoon guy said, I don't know anything. And so CNN played the morning excerpts and Fox played the afternoon excerpts. And then I realized that both parties want their talking points. They don't care if he talks crap for 4 of the hours. They care that they get their talking points for the other 4 hours. So Fox played those things all day long and CNN played theirs all day long. And what they all agree on, there's one thing they agree on. They all want to get reelected in the next election. So they need their talking points. So Sondland basically said, I'll give them both. I'll give it to them, both of them. And they don't care. So the whole thing's a farce. It's like Clinton pardoned Mark Rich. And they chased Clinton around for pardoning Mark Rich. And they ignored the fact that Clinton pardoned a bunch of drug lords. Right? They didn't bother to chase him on that. That was the smoking gun there. Clinton was pardoning drug lords. And yet they were obsessing over Mark Rich. Why? Because it's like dogs fighting in the yard, right? It's all teeth, a lot of snarling. No blood, no damage. They lick their balls and go to sleep. And as a consequence, there's nothing comes of it. So they're just riding Trump like a donkey, and then Trump's going to, what's going to happen? They're going to ride him like a donkey because they can't beat him in 2020. And that's not a great reverence for the guy. I'm just watching. To me, it's clear that they don't have any way to beat Trump in 2020. And they're trying to find one, but they're not going to find it unless they can. If they want to beat Trump in 2020, the economy's got to turn down. If somehow they can't get the guys with the levers to turn the economy down, then Trump wins in 2020. It's that simple, I think.
Do you know what's interesting, surprising, and also counterintuitive about the impeachment stuff that's happened in the last month? Is that on two of the days, Trump actually had record amounts of campaign fundraising. So over $5 million days. Over $5 million days in 2 days, and over 600,000 new smaller donors. So the money is literally
I think the Democrats are
pouring in.
Themselves. Yeah.
Trump already has a war chest of over $120 million raised, and we're still quite a bit away from the election, and we're under a year, but still quite a bit way away. Trump has a lot more money for his campaign. Now, obviously, his family businesses have been hurt a lot by him being president, but for his campaign, he's raised a ton of money because of the impeachment, off of the impeachment. So I don't think Democrats saw that one coming.
Well, or they're just desperate. But yeah, and the Democrats can't, for the life of them, find a candidate that can beat them. Right? They have one candidate I think has a prayer of beating him, and they won't let her near him, and that's Tulsi Gabbard. I think Tulsi Gabbard would have a chance of beating him, but they don't want Tulsi Gabbard.
Well, the military-industrial complex doesn't want her, you mean?
Yeah, but they might even be able to buy her. But right now she's looking like it. But the rest of the candidates all look pretty pathetic. I mean, there's some who look okay, but they look like lightweights, sort of Jeb Bushes, right? And so
have you actually watched? Have you actually watched any of the Democrat debates? I have friends who watched some of it.
Not much.
And from what I've heard, the summary of most of the debates is asking it's all politicians promising more and more free stuff for votes.
Right. Well, that's the MMT guys. That's where it's coming. So I think Trump beats him, and I'll tell you why I think it's true. Is because the question I like to ask people is, especially people who doubt that, I say, name for me the demographic who voted for Trump in 2016 who won't vote for him this time. And it's hard to identify one. People try to find the farmers and stuff. You think some farmer's going to turn and vote for Buttigieg or whatever, or Warren? No. And then you say, now name a demographic who might vote for Trump this time who didn't vote in 2016, and you have the whole never-Trumper crowd. I know a ton of people who would have voted straight Republican line, but they just couldn't pull the lever because of Trump, right? It was Donald Trump. How do you pull the lever on Donald Trump? And now a couple of years later you go, he fought some unbelievable battles. The world has continued to rotate on its axis. He's like anti-fragile. Every time they fail to get him, he seems to be stronger. And so I think the never-Trumpers are going to say, I could vote for Trump. He didn't destroy the place. He didn't bomb too many countries. He bombed a few too many, but not as many as Obama. He was bombing the crap out of people. So I think Trump has made progress. And I don't care what the polls say. They lie. They use polls to lie their asses off.
Oh man, that would if Trump wins 2020, and I would say he has a very high probability of winning 2020 now because the Democrats just don't have a good candidate. Although people will vote party lines, but if Trump does win 2020, I think a lot of
though. You got to win with enthusiasm. You can't have people sitting at home because they're bored. You got to get that marginal vote. And so when Obama won, right, he got the marginal vote. There's a tremendous sense of, oh man, this guy's good. He's smooth. He's great at the microphone. First black president. I feel good. I'm going to pull that lever, right? But you're not going to. None of these candidates are going to generate that. Oh, let's pull the lever on a 75-year-old, teenage groping, washed out has-been who's been in Congress and never done anything, right? You're going to really pull the lever on that guy with enthusiasm?
So you've been on college campuses for a very, very long time. You've noticed a lot of the changes. We've talked about this in past interviews. Are things headed towards a civil war, in your opinion, because of how different people are with their views? It seems, the lack of free speech, the lack of people respecting one another's opinions. I cannot remember this being this bad ever in the history of the U.S. I've studied what's happened in the 1960s and 70s. So things are at those levels, and perhaps there's an argument that there's worse because of how protests are being shut down, or if a conservative speaker wants to go speak at a UC Berkeley or one of those campuses, they're getting charged just an unbelievably mind-boggling amount of security fee to pay for their own security just to speak there.
It's interesting. I actually think the college campuses are calming down. And I think in part, I would say about 3 years ago, you couldn't speak out against anything without fear for your life, right? I mean, you were just, when I wrote my annual year in review, I had people vetting it saying, look, I said, if you see anything there, I'm going to get fired on because, no, I don't care. I don't worry about it. I know that our administration is very, very free speech oriented. I do believe that now you can speak out on a college campus and not get canned and not get attacked. I write some preposterous stuff, right? I write stuff that is so unfriendly to the super left. and I never hear from them, right? They don't care less about me. And so, there's no Peter Boghossian problem here. They couldn't get me either, right? That doesn't hurt. But now I'd say that the campuses have come down. The adult world, on the other hand, is getting crazier. And I've talked to and read serious historians, not just bloggers, historians who say that they can see parallels between the pre-Civil War U.S. and now. And it's the complete failure of the two sides to be able to communicate and sort of reach across the line and shake hands. They said that's what it was pre-Civil War, and that's what it is now. So I think we should be nervous about that. Yeah, I think we have a problem, but it's the adult world, not the campuses, in my opinion.
Yeah, I mean, Twitter has always been pretty bad, but it seems just in the last few years things have gotten a lot worse. So I want to talk now about the student loan debt crisis. This seems to be something that the Democrat politicians are talking about a lot more, about canceling student loan debt, or Bernie Sanders talking about free future college. But what about the people who have already busted their butts to pay back their student loan debt? There's absolutely nothing fair to those people who had to sacrifice and maybe work two jobs to make extra money to pay back their student loan debt, and then now going forward, people are going to get free college. So that's going to piss off even more people going forward. But I was digging into the newest Fed's financial stability report, and that's a joke in and of itself. Just like Andrew Yang's quote-unquote freedom dividend, that's an Orwellian misnomer as well. But the growth rate, David, of the student loan debt is enormous. According to the Fed's own data that came out last month, it was growing at 9% per year student loan debt growth since, I think, 1997 up to present. So the student loan debt is one of the fastest.
It's linear. I mean, to me, I've made the assertion that the student loans are being used as monetary policy. They are liquefying the system with student loans. That's how they're leveraging up the system. Now, there's two categories of problem here. One is, what do you do with existing student loans? And there are some that are simply never going to get paid. They're not going to get paid. When you're carrying $200,000 and you have a degree in sociology, you're not paying that debt. I don't care, that's like someone who has, 20 tumors in their body. You can say, well, I don't want to die. And you go, sorry, you're going to. And so then the question is, what do you do with that kid? Because statutorily speaking, they're supposed to pay. And the way the rules are set up, that if you don't pay, you're hobbled, right? So this is not a debt that you get to just ignore and have creditors quit calling you, potentially. So that's the first problem. The second problem is, what do you do going forward? You keep letting kids pay a fortune to go to college. That's a separate issue. What I do think is important, however, is that you don't make it free. And the reason you don't make it free is because if you look across the colleges across the country, there's a vast number of students who really are learning nothing, best I can tell. They're studying the wrong stuff. They're studying the wrong stuff at the wrong level. They're, some kid who's got a 500 verbal SAT, who's an English major. I can't think of a bigger waste of money than that. And the economy needs people to do various things. And the fact that there are people who studied philosophy or English or whatever thing they want to study, or the wrong science for that matter, climate science, how's that? And the fact that they studied something doesn't mean the economy needs that. And so the kids in college are being trained to be baristas while the world is demanding more plumbers and carpenters. And so this huge push to send everyone to college is ignoring the fact that the law of supply and demand is demanding different kind of function than colleges are putting out. So I think we're heading, over a very slow period, I think we're heading towards a future in which credentials play a lesser role than they used to. And so I think that companies will hire software writers who don't have a college degree as long as they can, learn to code. And I think they'll hire people with skills. And there's already evidence of this. And so the college degree as a ticket, as a meal ticket, is going to be become a bad idea. It already is a bad idea, but I see kids who come here and do amazing things because they study the right stuff and they work really hard, right? Those kids are going to rock. They're going to pay off their loans in a heartbeat. But there's so I analyzed this year, that you can take courses in menstrual studies. You can, ancient Tibetan literature, right? There's courses in everything imaginable. But if you take
you can learn that. You can learn that on your own. You probably shouldn't be paying $1,000 for a semester of that or getting a degree in that because
each 4-credit-hour course is going to cost you $8,000 at a private school. So while your kid, let's talk to the parents. While your kid is taking menstrual studies, someone is writing a check for $8,000. Maybe you ought to look over your kid's shoulders and say, sweetie pie, drop the menstrual study shit. We'll support a gap year out in Aspen. You can ski and bus tables and whatever. But I'm not paying another $8,000 for menstrual studies.
And when I was an undergrad, the tuition, I think there's plenty of blame to go around with the parents, the kids. I mean, you're asking 18-year-old kids to take on that much financial responsibility, and they don't really know very much at 18 years old. A lot of them don't know what they want to do. So you're asking them to take this immense financial burden on, and they honestly shouldn't. There's blame with the parents, and then the other blame is the perpetual tuition hikes. When I was going to school a little over 10 years ago, it was, I think, $1,000 for one class for a semester, but I was in an in-state school. I wasn't in a private school. I graduated with very little student loan debt because tuition was a lot lower. Now I think the state school I went to, the in-state tuition went up, I think, over 4-fold in the last 10 years. So
the reason it went up so much is the states are all broken. So I think a place like Illinois, University of Illinois Urbana, which is a great school, I think they're getting something like, and boy, if someone from Illinois hears this, it's wrong, I'm going to hear from them, but I think they're getting something like 11% of their budget from the state. Now, here's the problem. In a place like Cornell, we don't get any from the state except for in the state schools at Cornell. But let's take a place like Princeton where there are no state schools. They can charge tuition. Illinois doesn't have the big tuition, so if they're not getting the state money and they're not getting the tuition, how are they paying their bills?
Well, what they were doing, David, at the in-state school, what my school, I went to Virginia Tech undergrad, what they were doing was the in-state tuition at the time I was going was around $5,000 for a year for in-state tuition, but out-of-state they were charging, it was over $20,000. So out-of-state was a lot more money.
For out-of-state kids is revenue, right? So if you have a kid who wants to apply for a safety school, they should apply to the big state schools out of state. You go to some place like University of Michigan or Wisconsin or something, you get a good education. And to the extent that those states would love to have you pay the full tab, it's a lot better than going to some shitty little place. So I think a smart move I don't think the discount for in-state is anywhere near the level. I think there might still be a little discount, but I don't think it's anywhere near the level that it used to be. I mean, the in-state tuition used to be an unbelievably good deal, and then they would pay their bills with the out-of-state tuition. That's what the school was doing when I went there, because I was talking to my friends who were out-of-state, and they were paying way more. But I think the in-state tuition at the school I went to now is way higher. It's up over fourfold than when I went there 10 years ago. So that's the comment. So a lot of people think that somehow,
but
I'm trying to figure out where the money's going.
Yeah, and that's what I was going to ask you. So how do they justify perpetual tuition hikes? Because are the teachers teaching with virtual reality software? Are the students getting VR headsets? Because a lot of the I've gone into some graduate programs in the last few years, and it seems the classrooms have not changed. The books keep going up in price, even though that's another racket where a couple sentences maybe is changed in a textbook, very little changed, and the new textbooks are a lot more money every year.
Yeah, and, faculty could do a better job of beating the textbook racket. I went and bought with some unrestricted industrial money I had. I went for a laboratory course I taught. I went and bought up a bunch of used laboratory textbooks and I put them in the drawers the way you would give a high school kid a book, right? They don't pay for them. They just get them at the start of the year. And they use them for years. And I paid like $800 for all of them. And so, you know, a faculty member could say, look, here's the deal. I'm going to teach this monster course in organic chemistry. And I'm going to use this book by Professor X. But you can use any one of the editions back to the 7th or the 6th edition. I don't care what. We will run the course. It'll be just fine anyways. And run the course so you don't need to have the latest edition. So you're not saying, here's a problem number 12A, right? That's where having the latest book is important. So then what you do is you let the kids go out there, and they go out and they can find copies of the book for peanuts. Yeah. So faculty members can do a better job of not having $250 textbooks and not asking 250 times 1,000. How much money am I shoving down that rat hole? 1,000 person.
Are some of these faculty, David? Are some of these faculty members, are they getting kickbacks from the book companies? Because that's what it seems. From what I've heard.
No, that's not a racket. Some of them write their own book. I wouldn't focus on that too much. You know, writing a book is a royal pain in the ass. The competition is very stiff. And so these guys who write the books, they're playing Russian roulette themselves. And someone's got to write them. But, you know, I have a colleague who had like 60% of the organic chemistry market, part of the freshman chem market. That guy made a lot of money. But no, it's the book. My colleague, who's the most prolific textbook writer, hates the publishers. He can't stand the publishers. They are the problems. He doesn't want to charge that much for the book, right? And so then, but there's other costs here too. For example, you say, well, the dorms are really fancy. Well, if the kids look at skanky dorms, they're going to another school. The bottom line, you want to get the kids to go there, you got to keep up. So there's an arms race.
Not all the dorms are fancier. Not all the dorms. I mean, maybe they build a new building.
Well, we have all new dorms and stuff, and I bet you Princeton does. I bet you Yale does, and you know that's who we're competing with. And so
I was talking about state school.
Yeah, right. They're starving to death, and guess what? The kids are rushing off to Princeton if they can. The other thing is I was going to ask you for perpetual tuition hikes about the endowment funds, because it seems that these universities are now running hedge funds. So they think that they can get away with perpetual tuition hikes because they've been doing it for decades. And then they take all that excess capital that they don't necessarily reinvest back into the school or students. Maybe they buy a new football stadium or new dorms, but there's still a lot of leftover capital that's not being used to improve the conditions. And then a lot of these universities now have enormous endowment funds and that are managed essentially like hedge funds. Well, if you actually look at how they've done, they haven't done that well. The other thing is if you actually look at how the endowments are structured, what you discover is those massive endowments are so pigeonholed precise. So they might include, for example, funds that have been donated to my fraternity that I've donated to, and they're in Cornell's bank book, but it's the fraternity's money, period. And there might be, those endowments include specific scholarships that are given to people, and their endowments for all. The amount of actual cash, liquid endowments that most schools have, the kind that they can really mess with, is not that big. That's why, for example, like Harvard with a $35 billion endowment in the 08-09 crisis, we're having trouble making payroll because they were paying a huge amount of their operating expenses were coming off the endowment, and it was illiquid. And so they couldn't make – Cornell was going to have trouble making payroll because it's illiquid. Now, Cornell pays a lot less than Harvard. Now, when Harvard pays 55% of their operating expenses off the endowment, you know what that means? That's 55% the students didn't have to pay to run the university. And so, in some sense, this endowment story and this escalating tuition story is very poorly understood. And by the way, you know, the University of Michigan, for example, has a $93 million payroll dedicated to diversity, right? This is the payroll of the deans of diversity and the coordinators of diversity, and I'm not going to decide whether or not that's right or wrong. It's a shitload of money. And what I am going to tell you is that it's not that optional either. So if you're a university and you're coming up late on diversity, you're going to get hammered. You are going to get hammered.
And a bloated budget like that means that tuition has to go up, right? So
so here's what I can tell you is I've been in the chemistry department since I was a freshman, with the exception of a couple of years in grad school. We are way, way leaner and meaner than when I got there as an assistant professor. We have far fewer people, far fewer support staff, and I've even analyzed the salaries. And the highest paid guys, if you look at the highest paid guys back in 1980, the old guys are here, I asked them what they were paid, things like that. And the highest paid guys in 1980 versus the assistant professors in 1980 versus the graduate students in 1980, it all scales precisely. It all scales to the present, and they haven't changed relative to each other. And if you look at it against inflation, so it's not there either. So it really is some administrative bloat. It's the fact now that when you have money coming in from the feds, and of course we do, the accounting and the complexity and the requirements are so different than it used to be. Look at a doctor's office. When I was a kid, you go to the doctor's office, there'd be a doctor, a nurse, and a woman at the desk. Now it's a bank of people managing all of the different functions in the office. That's what a university looks like.
Well, yeah, you have 10 at a doctor's office. My dad's a retired doctor. You have 10 paper pushers now, and you have a couple nurses who are overworked and underpaid, and you have the doctors now
are any of those people optional? Are any of those people optional?
The paper pushers, of course.
Yeah. No, they're not. No, they're not. The medical system demands those paper pushers. You can't. You got Medicare.
I would call them optional. I would call them optional.
Not, though. They have to handle Aetna and Blue Cross, Blue Shield. They have to handle all the different insurance companies. It's not optional at all. They're working all day because it's that much more complex. Now you can say it's optional because
the healthcare system should just be about the doctor, the patient, and the nurse.
Yeah, but given what these doctors face right now, those 10 people are not optional. And given what we face right now, the administrators at universities are not optional. Same reason.
And then meanwhile, you fill out a form for your doctor. The doctor reads the form. The doctor spends maybe a couple minutes with you, and that's it. So that's how commoditized the patients are. And if the doctor doesn't see a certain number of patients each day, the doctor doesn't make a decent living.
Right. And I was told by my GP a number of years ago, he says, if you run your office poorly, you can go bankrupt. This is not necessary. Now, my wife had a surgery once, and it was an hour and 45-minute neck surgery, but it was said to be a standard surgery. It was a neck fusion, but standard. You know there's insurance costs also. But her doctor's fee, not the operating room, not the anesthesiologist, just the doctor's office fee was $26,000. Right? Somehow that guy's probably making a ton of money. Does he really have to make that much money? I don't think he does. But right now the system is set up that he can charge that, and it pays it, and so he will charge that. That's how it works.
Yeah, I mean, there's so much waste fraud. We could spend hours, David, talking about the waste, fraud, corruption, and abuse in so many different industries pervasive throughout the system. I've lived right outside of Washington, D.C. for 20 years, so I could go into tons and tons of stories that I've heard off the record, and I follow. There's a global bull market in corruption. This is not just in the U.S., it's global, and a lot of people are getting fed up with it, but yet the system just seems to keep enduring, and it's because, to circle back around, what we spent the early part of the interview on, it's about the central banks, because the central banks are not holding the politicians, the corporate CEOs who do share buybacks and screw up their balance sheets. They're not holding these people accountable, and the central banks just paper everything over because they want to maintain the status quo.
Well, the other problem is the sheer size of government has exploded, right? And the administrative state, you have to have licenses to be a florist. You have to have licenses to braid hair, to cut hair, all these things. 29% of the population needs licenses to do their job now. And that there's inspectors and fines and punishments and bureaucrats, and that's a bloated government. If you need your barber to have a license to cut your hair to protect you, you need therapy. You don't need a barber license. You need therapy if your barber can't cut your hair just because he does a good job or she does a good job. That's insane. But the government just keeps it's this growing sort of resource-consuming thing. There's nothing that'll stop it. Read Jonah Goldberg's latest book. He talks about the administrative state. It's a horrifying story about how it is growing without restraint. It's the trouble with tribbles. It's bloat feeding on itself. That's why I'm a libertarian.
What the scientific term, what is entropy, right? It's wasted energy.
Well, it's certainly there's heat, which is enthalpy, and disorder, which is entropy. And so the world is heading always to higher entropy. Civilization is about converting enthalpy to organization, right? So civilization really is all about taking fossil fuels out of the ground and creating a highly ordered society using the energy, using the heat from those fossil fuels. That is what civilization is. Started out by cutting trees and burning them. It's now pumping it out of the ground or using nukes, but it's always about converting enthalpy to negative entropy. And that's why, societies prosper when you have free energy, when you have cheap energy.
Yeah, I mean, there's so much waste, fraud, corruption, and abuse all over the place in many different countries, governments, corporate, at all these different schools, universities, healthcare, at all these different levels. And yet the system endures because the central bankers, these 5 or 6 large central banks in European Union, Bank of Japan, People's Bank of China, and, of course, the Federal Reserve, they just keep papering over everything. So this is not sustainable. I don't want to give a time frame on this, but we could have a situation where the real economy just keeps getting even worse with stagflation and taxes, but the stock market just keeps going up and up and up to even more ridiculous valuations.
Well, so our GDP is growing 5% faster. Our debt is growing 5% faster than the GDP. That is so profoundly unsustainable. You can't have your debt growing 5% above GDP without hurtling off a cliff. And so, there's so many people to blame. I blame the Fed for being the guys with the most centralized power and the complete and utter lack of backbone. There are plenty of other guilty parties here, including the people, right? Including us.
Yeah. Yeah, I mean, the Fed has the most power to financially keep the system going because they're not elected and they could just arbitrarily decide, the Federal Reserve can, that they're going to issue trillions of dollars in currency swaps to the European Union or Japan, or if things get bad enough in China, they can do it with their dollar bonds. So they could do that, theoretically at least, to maintain the system and without any real accountability. It's just frustrating, though, to see this continue on. And then the stock market just seems to respond to the money printing, I guess, at this point.
Well, yeah, if you flood the system with money, don't be surprised if the speculators show up and pump up the price of assets, right? It's just that simple. The other thing to remember is the Federal Reserve is the answer to the banks, right? And the banks are multinational. And so, by commutative property, A to B, B to C, then the Federal Reserve answers to an international group. And so anyone who somehow thinks that the Federal Reserve's primary job is to take care of the United States is delusional. Their primary job is to take care of the multinational banking system. And that's no longer about the U.S. They worry about the U.S. to the extent we're the reserve currency and with a 500-pound gorilla in the room, and there's all sorts of reasons why our health is important to the health of the global economy. And for that matter, our Volcker wasn't the hero. He was just watching out for the multinational banks himself, but what they needed was medicine. But the gist is that the Federal Reserve does not work for the United States of America. The Federal Reserve works for multinational banks.
Well, they also monetize the money. They also monetize the debt for the federal government, so it screws over the people.
But they're monetizing the debt so that the banks don't get defaulted on it, right?
I view it a little bit differently than you. I view that the Fed takes care of the large banks, like you said, but also the big governments, and that the people and the small banks, small business owners, the people on Main Street are the ones who get screwed. So it's big banks, big government who get benefits from the Fed and the other central banks, and large corporations with the buybacks, with the artificially cheap debt, and then all the other entities get screwed.
Well, but for example, QE2 was all about bailing out Europe. It had nothing to do with the United States. It was all about bailing out Europe. It was a bunch of currency swaps into Europe.
Yep.
And so that's not, they're only looking out for the United States to the extent that the multinational banking system needs the United States to be okay. If for some reason we reach a point, let's say China's stronger, if for some reason we reach a point where the multinational banking system doesn't need us, the Federal Reserve will chuck us under the bus. They don't work for us. They don't work for the U.S. They work for the banks. You can never lose sight of that. You caught me grumpy tonight, dude.
Huh?
You caught me grumpy tonight. I'm in a mood tonight. I've been battling with some people. I've been battling with some people on Twitter between the climate changes and sometimes I don't have to say anything. I'm going, you're an idiot. But I'm trying to tell him he's an idiot without calling him an idiot.
Well, based on what the financial markets are doing, it's tough to gauge what reality is anymore. So all this currency and credit just keeps getting pumped in, and yet the dollar is counterintuitively, and I talk about this on my live stream shows and my podcast, why the dollar hasn't collapsed yet. So because all these other entities borrowed in dollars and they need dollars to pay back the dollar debt or they're in trouble.
Yeah, I'm inclined to believe that it's more emergent than that. And that is to say that sounds good, but it's one of those things where it'll sound good right up until that doesn't work, and then you go, why didn't that work? And I think the banking system is an emergent system that people can't understand. And it's got such a mind of its own, and that we kind of work at it around the fringes. But when it decides to have a cardiac arrest, we're not going to know it's coming. We're not going to see it's coming. We're not going to understand it because it's an emergent system. It's like, why did that avalanche let go? Why did the earthquake let go? Who knows, right? It's an emergent system. And why do you all of a sudden have, swarms of locusts? Why do you also have, dolphins beaching themselves on the beach by the thousands for no reason? Because biology is an emergent system, right? Just things happen. And so I think the banking system does that. And the Fed is always trying to solve the problem using, archaic tools. They're always patching it up. But then we'll have a big reset. Then they'll say, don't blame us. Their solution will be to, at the end of World War II, and this is the thing people don't think about. At the end of World War II, while people were sitting on their houses, that is a pile of rubble. It used to be a house. And they don't know where they're going to eat. They're waiting for people to drop food in the Marshall Plan, right? And they're at risk of starving to death. They're not worried about who owed them money, right? That was a big reset. 50% of the loans in Europe got vaporized by World War II. That's a reset. And so we'll have resets, and hopefully it won't be a war. But you get them, and then they say, oh, that'll never happen again. No, that's right. We'll have something else happen again, right?
Yeah, history, I agree with you. History is full of resets. The Plaza Accord was a reset. The dollar was devalued 50%, but in exchange for devaluing the dollar 50%, the U.S. got beneficial trade deals with Japan and I think Germany. So that was a reset
25, 30-year reset still, right? Japan has been doing 25 years of reset.
Well, I don't know if I'd call what Japan has done a reset. I think Japan was the first country to do the craziness that all these countries are doing now, which is where they didn't let their banks fail. They didn't let bad loans go bad, or not enough bad loans go bad. They let some banks fail and they let some loans go bad, but they didn't let everything go down. And they papered, they just routinely papered over everything.
They burnt the clock. Japan has spent 25 years going nowhere. That's the reset. To me, time is the scariest variable. I'm not afraid of the Dow dropping 80%. I'm afraid of the Dow doing nothing for 30 or 40 years. I'd rather have short times, bad events. I don't want it drawn out. But I think Japan drew it out, but they're still getting the same reset. Right?
Well, you have cash though.
Was a reset.
You have cash though on the sidelines, right? So if there was a stock market crash for 6 months or 12 months, you would have cash to deploy. You've told me for years now that you
belly up. Provide the banks don't go belly up, right?
Or they shut down your bank account and limit the amount of money you can take out or use to buy stocks or something.
Yeah. They can reset my ass. Probably not as bad as the next guy, but yeah. And it's coming, right? Because the 240 trillion of unfunded liabilities and the state pension plans are all broke. They're not just underfunded now; they're insolvent, right? When you're funded 25%, you're not underfunded. You're insolvent. You have no chance. You're like an 1,800-pound person who somehow thinks they're going to live another 30 years. No, you're not. And so when you're 25% funded, you're insolvent. The mechanism by which it plays out is not knowable. You don't know what kind of interventions are going to occur. But major corporations, P&G, Intel, they're all underfunded pensions at the end of a massive equity boom, bond market boom. They're underfunded. Someone please explain why they're not bloated at this point with excess cash. The reason is because they skimmed it off. They embezzled it to make their profits better, to make their bonuses better. Capitalism has done a terrible job of being capitalistic. I blame them, right? I'm a free market capitalist. This is not free market capitalism. This is crony capitalism. What is that? So the other day, Starbucks offered its CEO a $50 million bonus if 3 years from now its price has beat 80% of the S&P. Now tell me how many crimes he will be willing to commit and how many horrifyingly bad decisions for the long term he will make to hit that $50 million bogey. He will become a goddamn criminal of a higher order.
Yeah, I think there's a very large corporate governance problem. I mean, this could be solved in 10 years if corporate boards were actually forcing better things on the CEO, where the CEO was actually rewarded for new products and services and keeping a clean balance sheet without debt. But that's not what's happening. I haven't seen any company.
Starbucks. Well, let me give Starbucks an alternative model. The alternative model for Starbucks is you come up with some metrics that represent real growth of the company, right? Real wealth creation. These guys are smart enough to go. It's not about beating the S&P. It's about growth of the company and flourishing. And if they can't come up with metrics, then they're doomed anyways, right? So there's metrics. And then you interview a bunch of people and you say, here's the deal, guy. We're going to hire one of you. And you're going to work for free for 3 years. And if at the end of 3 years you reach those metrics, you get the goddamn job. You know how many people would apply for that job? Tons.
Not that.
Tons of people. Tons would take that. A shot at being CEO of Starbucks. My God, you get so much talent coming out of the woodwork. But instead, they give it to some guy who wants $50 million bonus for hitting a false bogey. Starbucks could drop 50%, and if the rest of the S&P drops 60%, he gets his bogey. Tell me he shouldn't just be hung by the balls until dead.
Well, I think some of these high-level corporate executives would not want the opportunity to have to wait to get paid. But, more lower-level people who want to do the right thing, they would be on board with that. But the people at the top are so ridiculous.
But people are not less competent, though. You can't
I agree.
Me that this country is filled with people who could run Starbucks like a goddamn commander. And they would do
you're
it
preaching
for free
to the choir. I agree
this
with
is
you.
A walk.
A lot of this.
This is a walk-on. This is a guy gets to walk on the Boston Bruins hockey team. They say, I'll tell you what, you get to play in 3 games for free, and if you're good, we'll let you stay on the team. How many hockey players would try to do that?
Well, the system is set up to avoid that, though. There's a lot of political games
their friends
played.
are on the board of directors.
Yes. Yeah, there's a lot of political games to prevent the most competent people from getting to the top of the corporate food chain. That's normally what happens. Same thing in government. So normally the most competent people.
This is the corruption of capitalism.
It's in government. It's in governments too. It's in government too. So where the most competent people don't rise.
Inefficient government if capitalism works.
Yes.
You can overwhelm
if government's not too big.
If it's not too big, yeah, that's the problem. Government's not too big too. But so that we have massive problems to deal with, and I think the people are going to get angry, and I think the reset is going to have some really old school thinking behind it.
I would like to see gold. I would like to see gold and silver involved, but we'll see. Unfortunately, it looks like with what China's doing, they want to go cashless society and crypto yuan and integrate social credit score, more totalitarian government, less freedom of, less rights. There's no freedom of speech in China, but implement, maybe move those control systems of cashless society, a government cryptocurrency, and social credit score, move those to the West, fully integrate. Because with big technology here and censorship, there's already some of that. But the one thing that's tough to tell right now, David, is what will collapse first, because there's so many problems globally. I try to highlight this with my listeners, is a lot of people tend to focus on the U.S., that the U.S. is the only problem. The U.S. has the most problems. The largest problems are in the U.S. I've tried to highlight this for the last couple years now with my podcast listeners, is there's so many problems globally, and it's tough to know what will collapse first. So there's probabilities, and there's the possibility that a lot of different things could collapse first before the U.S., and then the U.S. is saved for last.
Well, if you think the appearance of a digital cashless society isn't a reset, that's a reset, right?
That's not a good reset for people like me.
No, it's a total loss of civil liberties. It's going to be one of these resets where we're going to spend decades stewing in mediocrity because it doesn't work. And then it'll be, Soviet Union 2.0, right? And then what'll happen is that will be this massive reset. It could outlast, the lives of everyone today. That could be the reset.
Yep, and then
it could end up looking like Hunger Games for all I know.
Yep, and then if you criticize the wrong government or the wrong corporation, your credit cards, your bank accounts are all shut off, and then you can't, like in China, you can't get on a train or a plane. Then they shut you down. Right,
and everyone's stupid enough to keep using Facebook, right? Cancel your Facebook, and by the way, they already own you, so it may be too late, but give it a try. Take it, people. Zuckerberg wants to get a hold of everything. He's just a pawn, though. It's not Zuckerberg per se. It's this creeping digital gulag. I went so dark at the end of this year. This stuff drove me nuts. It just all feels like it's heading for some gigantic crescendo. And I just don't know what it's going to be. I just know that
I hope I'm wrong.
I hope I'm wrong. Being a tool.
There's so many protests. So there was a small increase in the bus fare in Chile, right? And that caused an enormous protest because people could not afford their cost of living continuously going up. So you have the protests in France.
Violence is trending. The way I phrase it is violence is trending. So as the Federal Reserve opened the Overton window wider by saying these weird policies are now normal, and they go, dude, they're not normal, but you're trying to make them normal. The populace is opening the Overton window wider too by saying, oh, by the way, rioting in the streets is normal, and it's happening in too many countries. And we could end up in an age of revolution, an age of uprisings. Right, Hong Kong, the yellow vests in Paris. It's not just banana republics. We've got the Battle of Portland. We got Antifa versus the Proud Boys in Portland going on. Right, this when it becomes socially acceptable to rebel with violence, you got a problem.
And Chile has the best economy in South America, so for them to have problems. It proves my.
So the problem is I think what I want people to do is to wake up and say, "Oh my God, he's right." Not right about the details, but you shouldn't be enthusiastic about cashless society. You shouldn't be enthusiastic about the emergence of Facebook and Google and stuff like that. That Google has a real phenomenal purpose, but we're heading for a real digital bizarro future if we're not careful, and we should be very, very careful about giving up our civil liberties so willingly.
From speaking to a lot of people, David, most people don't care unless their housing price would fall or their stock portfolio, the stock market would fall. And then people would start waking up like I did in 2008 and asking more questions about the system, why the banks are getting the bailouts. So I think that's why the effort.
It'll be too late, though.
Well, but my point, though, is that that's why the people in power keep papering over everything. They do not want the majority of people to wake up and start questioning, why did my housing prices fall so much? Why did my stock portfolio fall so much? And then start researching the Federal Reserve System and its history. So that's why one of the major reasons.
Currency is fiat, as is government. So someone declares what the currency is, and it's right up until someone says, "Oh no, it's not." And government's the same way. So the government says we're in charge, right up until the people say, "Oh no, you're not," and then you get these big events. Right? Then all of a sudden the advantage of being a Roman citizen is outweighed by the disadvantage of being a Roman citizen. Guess what? That's the end. It's not necessarily fast, but it rocks.
The rules changes in the last couple hundred years of the Roman Empire when there were two capitals were nuts.
That was just one of the
symptoms.
There was an insane. Right? That was a symptom. Mm-hmm. That was a symptom. That was the government. That was Rome in overreach, so they kind of had to split in half out of sheer size, right? And then their outreach, right? They couldn't. So the book you want to read is Joseph Tainter's Collapse of Complex Societies, and he talks about just the inability of a complex society to sustain itself because its complexity eventually overwhelms it. And he's an anthropologist. He's not an economist. He's an anthropologist.
Well, also the system now is not anti-fragile. It's very fragile. Despite it being large, despite what the central banks are doing, papering things over, it's not anti-fragile at all. It doesn't adapt well at all because it needs lower interest rates. It needs currency swaps, or it needs QE versions of QE, Repo Madness. Pick whatever program or whatever they're going to call it. It needs more easy and cheap capital to sustain itself, and that's not an anti-fragile system. That's a very, very fragile system.
Yep.
Well,
it's a very fragile system.
So we've been talking and ranting for well over an hour, David. I could talk with you about the problems for a lot longer than that. I know you and Chris Irons at QTR have a lot of great discussions about this. I want to thank you for your time today. If our listeners want to go and read your report more, how do they do so?
If they search my name, David Collum, Year in Review, they'll hit it. They can go to Peak Prosperity. They can hit me up at Twitter. It's under David B. Collum. If you need, I'm also at the chemistry department at Cornell, so you can figure out who I am. If you forget the name, going, oh yeah, that's the guy, then you can go back to Google with that information. But probably the easiest way is to hit Twitter at David B. Collum, Collum. And from there, the pinned tweet is the Year in Review. So if you're not on Twitter, you're missing a special experience. They're probably just as bad as Facebook, but it's my Facebook. So interesting. And Twitter becomes a bit of a cesspool sometimes, but it's generally I have fun on it.
Yeah, I agree. There's good and bad things about Twitter.
Mm-hmm.
Well, thank you very much for your time, and I look forward to your other podcast interviews about this. We'll see if they're as spicy as the one we just did.
Hours. I have literally two in the next 12 hours. By 1 o'clock tomorrow, I will have done two more. So it's getting this time of year is a little tricky. But I enjoy.
Hey, you got a second career if you want it. You can transition to this now.
Yeah, the big bucks. Yeah, well, you know what I do have that I'm really lucky, and I hope people understand that I understand, and that is I have a voice that I can I have an ability to speak that most people don't have. I don't know where it came from, but over the years I've built up this following, and so now I can reach lots and lots of people, and I value it so much because there's. One time I put out a tweet about being a conspiracy theorist, and I got 7,000 likes. And that's 7,000 people who I think in some way, shape, or form are saying, thank you, you just said it for me, right? Thank you for speaking for me. Because they don't all have that voice, right? If you're on Twitter and you got 12 followers, you're not reaching anyone very effectively, right? And so somehow I'm very blessed that I've been able to wiggle my sorry ass into being a B-team thought leader. And being able to rant on interviews with guys like you, and most people don't have that right. Maybe they'll shut me down eventually because I get too wacky, but till then, I keep ranting.
Great. Well, keep up the good work, and I know you put in a lot of time and effort on this, compiling all the articles and research and information in addition to your day job. So you're doing a lot of extra work on the side, and you're not getting paid for it right now. So thank you for enlightening us all for free.
Not a penny. I've never accepted a penny for any of my rants. And you know what? You get every penny's worth you paid.